Hey, good morning, everybody. It's Thursday, August the 23rd, well, I don't know. I'm looking at the market indexes here, and to tell you the truth, I've just been watching my stocks this morning and not really paying too much attention to the indexes. I'm actually kind of surprised to see that they're down because I think in this market, you are in a constructive phase. I think the pullback right now, let's just take a look now and get to what I'm talking about. It's obvious here you have a sharp move, and this is an obvious or rather logical point for the market to get hit with some overhead supply and some selling, and you saw volume pick up on the NASDAQ. I believe this is Tuesday, and so, it looks ugly, but the thing is you got to look at the market in terms of where it was or where it's been and where it is now. And when you see this sharp move, I mean, that's quite a move from here, from early August. This rally in August really has been I believe one of the sharpest. Let's see, in June that was pretty sharp, but this looks like it might be sharper, and maybe by the time August is over it'll be even higher because the market's acting like it really doesn't want to go down. Even though you're seeing the index is down, we're seeing a number of leading stocks acting very well today, and of course we know which ones those are because we've talked about them in recent reports, pocket pivot reports on stocks like Regeneron, on Mellanox, viable gap ups in stocks like Coors, Michael Kors Holdings, and we'll get to some of those. But as I see it, you're still on a buy signal, and I think the buy signal is what, somewhere down here, right, Dr. K? Closer to the 3
that's right.
level. Yeah, and so it's running nicely, and I should point out I did sell some stocks into this move just because it looked a little bit frothy. You saw Apple going parabolic, but my intent at all times is to buy leading stocks on weakness. That's the way I operate. Dr. K may operate a little bit differently, but I deal with much larger positions usually when I'm coming in, and so I'm more comfortable working into a large position and using weakness to accumulate it and then lighten it up if it starts to streak. Eventually, however, the theory is that if you end up in a sustained rally, that it's going to be about thinking less and sitting more, and so you're going to get out of this mode of selling into extreme strength and buying into weakness, which has really been the pattern, to, the system or the method, rather, the tactic, you might say, to use in this market so far during the summer of 2012, which is really the bull market summer of 2012, inasmuch as we've continuously moved higher since I believe the June 1st lows down here, the June 5th lows, rather, June 4th lows, rather, on the NASDAQ. And so, it's really been a bull market, but it certainly doesn't feel like it. And when it comes to individual stocks, that has kind of been the case. You've seen some things get hit, but you've seen some leaders rise to the forefront. And I think you're still continuing to see leaders setting up and even doing so as the market's weak. And I think when you're seeing the market down today, but you're seeing stocks such as, for example, let me pull up my daily chart. I mean, LinkedIn is holding up there. It's gotten back above the 50-day. I'm watching for a pocket pivot here, but notice how it has held up the last few days. Well, the market sold off on Tuesday and Wednesday. It held up pretty well, held the 50-day moving average. Just kind of watching this. If you see a pocket pivot, that could be viable. But some of my big positions are Mellanox, and of course that was viable on the pocket pivot here. You had a pullback last couple of days, yesterday primarily. I think that was due, and I'm not entirely sure. I think it's due to some of the rumblings out of Israel that they are preparing to attack Iran and that they're running out of time and all this other stuff. And, of course, the stock comes in, but I don't really think Mellanox is in any danger as an Israeli-based or Israeli-owned company because they not only have their headquarters in Israel, but I think they're smart enough, and I think the Israelis are very smart when it comes to this sort of thing in terms of dealing with the potential for war or the impact of, say, terrorist attacks. They have a headquarters in Sunnyvale, California, which is, I would say, the heart of Silicon Valley. I like to think of my alma mater, Stanford, as being the heart of Silicon Valley. We might say Sunnyvale is perhaps the spleen of Silicon Valley. But in any case, I don't see that as an issue for the stock. And so it pulls back to the 10-day yesterday. It holds the 10-day moving average. And I did actually sell some in here. Now we're just loading it up right here and starting to move out. I don't see Mellanox as being over yet. If you take a look at the weekly pattern here, I want to do a calculation. If you're looking at using a price target for Mellanox, I'm going to say that the first breakout was right here. Dr. K, what do you say was the first breakout for Mellanox in the current market rally? Right around this level here, coming out of this day, say around 38.
I would say you had the pocket pivot on June 6th, so that's really your breakout.
Back, which pocket pivot? So you're looking up here.
No. I'm looking.
January 6th, you mean? Not June 6th.
I'm looking at. Wait a minute. Hold on a second. Oh, you got the weekly. Yeah. So now I'm looking at the daily on another chart altogether, because I much prefer. That's the whole point of the pocket pivot, is that you get June.
Right. But what I'm looking at here is where did the stock begin its uptrend? In other words, the market started rallying.
I would probably say the Bible gap up.
Up
on
here.
January 26th.
Yeah. Okay. So that makes it even easier.
It had a gentle uptrend.
Just
there,
for the sake of lowballing it all, I'm going to use this level here, and you're basically breaking out about $36, $38, I believe. Let's say $37.50. You're breaking out here, 38. Let's say 38. You're running at 26 PE, and let's assume that you had earnings, I think, of $1.07 in 2011. And so at a 26p, that's I think it's roughly about here, maybe a little more. They're looking at on the trailing 12. But in 2012, they're expecting to do $3.75 a share. So at a 26 PE, you're basically running close to $100 on just a straight PE. But if you assume anywhere from a 50 to 120% PE expansion on $3.75 a share, the potential upside here I don't think is over with at all. And I can extrapolate that out on a PE expansion basis to 235 and higher, depending on how you want to, fudge the numbers on the PE or the earnings or whatever. And so, this can go a little higher. Now, if you're using point and figure charts, I'm coming up with 165 on the upside. So, all that is to say that it's not a guarantee it's going to get there, but I believe that in terms of assessing the potential of the stock going further from here, and Dr. K, you're looking at this breakout here, this viable gap up. That's right. Yeah, the one back. Okay, the one back earlier. You're looking at there. I'm looking at this is really where it started from. But even if you're using this as your initial, I guess, where you're really starting the stock's major move, then I think that there's still a lot of potential here. Now the stock's holding along the 10-day moving average. I think whether it's able to gather any momentum here is going to depend on the market. So. Indexes are coming down. You can see the Dow down almost 90, so we're retesting the lows of the day. The NASDAQ is holding up relatively better, and the good reason for that is stocks like Apple moving higher and holding up. And I wouldn't get too excited about Tuesday's big volume reversal. If you recall, let's go back to earlier in the year. In February, after the stock had this Bible gap up here, it had a big, ugly reversal there and came back in. And I tend to think that might be a function of some funds, growth funds in particular, because I think value funds and income funds, now that Apple is paying a dividend, are some of the institutional sponsorship that are more interested in the stock now. But you look at, say, Fidelity Contra Fund, and the last I checked, they are running over 10% position in Apple, and I know they've owned that for a long time, because as I recall, they were buying it back in 2004 when we were buying, when I was playing 1 million shares of it myself, back when I was running money at O'Neill. And so they've owned for a long time. It gets over 10%. I think you'll start to see mutual funds reach their maximum allocation size to the position in terms of the percentage size of the position relative to the overall portfolio. And so you may run into bouts of selling. I think that could have been some of this here. I think you'll see some of it show up in here. But all they're doing is lightening up to keep the position in line. It doesn't necessarily mean that they think the stock is topped and they're going to blow it out. So to me, this thing's going higher, and it certainly doesn't want to give it up on the daily chart. You can see that. And to me, it looks like it just wants to go higher. I mean, this pullback didn't even test the 10-day moving average down at 645 now. And so this thing's acting very powerfully. If you figure, you can use a 619, just use 620 roughly as a breakout point. You were 40 points past that, so you're about 6-7%, something like that, beyond the buy point. If you consider this to be the buy point, then any pullback down below 650, I believe, becomes viable. But I would see any pullback down below 650 as viable anyways, but the stock may just run away here at this point and go higher. And I think that's constructive for the market. If you look at another big NASDAQ name, Amazon, it's holding its pocket pivot here. That was a pocket pivot, followed through with another one on a breakout here, and basically drying up and going sideways. And so that's acting fine too. And so, buying on weakness, it pulls back into the breakout point. Buying on weakness is not a bad strategy. Regeneron Pharmaceuticals, another one we liked, and yesterday we sent out a report talking about the pocket pivot. But you could see this one coming as far as I'm concerned, because if you look at the weekly chart, you can see the tightness in the handle. You got a cup with a handle, and it's pretty tight in here. It is a biotech, and biotech sometimes there's news that knocks them down. So you have these two big down weeks. I don't really see those as a problem given the recovery in the stock and the fact that it held very tight in here. And now you're starting to break out, following up on what was constructive action yesterday. So we're acting on this thing yesterday. Somebody told me there's some other website last night telling everyone that this is going to break out and you got to buy on the breakout, I guess. But I think we were in there a lot earlier yesterday, and I think now at this point you're dealing with a nice breakout and kind of watching how it develops. So if this gathers some momentum, this stock I think definitely could have much further upside. Dr. K, I know you've told me this is one of your favorite stocks, and could you tell me why?
Well, if you look at the earnings, what I love about these biotechs is that when a biotech has had a string of, they've been in the red, which Regeneron has been for many quarters, and then they have 2 recent quarters of huge earnings upside, as well as accelerating sales. That's great. I mean, I just love seeing that. That's like a gift. Plus, institutional sponsorship continues to accelerate, and the industry group is ranked second. So this stock can do no wrong as far as I'm concerned. I mean, this right now, that is, you don't want to fall in love with these things, but the technical action also looks great. I love the handle that it's put in. It's very tight and constructive, and the pocket pivot that we let members know about yesterday is proving out very well today. Just almost textbook.
Yeah, almost textbook. As much as anything in this market can be textbook, right?
Yeah.
So let's see some other. I'm just going to go through some of the fun things that look pretty good. So Amazon, Apple looks pretty good. This PCRX, I kind of hate this stock because I have bought it before, and it looks like it's going to go somewhere, and it doesn't, and finally you're kind of edging up again. But they do have, a good drug. This, I think it's Antibrel, this non-opiate painkiller, pain management drug. And it's acting okay. So other ones that are acting, Seattle Genetics is a little bit problematic though because it's V-shaped, but it's interesting how it recovers and comes up back above the 50-day moving average. I think we bought a little bit of this at one time a few days ago, and then we just sold it. It's moving a little higher, but this is sort of straight down, straight up. So I'm thinking it needs to go sideways here, but that is acting okay. You see Affymetrix or Affymax. I always want to call this one Affymetrix. I hate this sort of thing. It tries to break out, and they sell it, and not a lot of volume on the selling, but it does come in and violate the breakout point, but now it's trying to move back higher again. I tend to like a stock like Regeneron if I'm going to play a biotech or anything with earnings. Alexion has been a very strong name, and this is not a bad little pullback, to the 10-week moving average. Second one after this breakout. Probably buyable here if you like to buy things down like that. Might prefer to see some kind of a pocket pivot move as confirmation of strength first, but for those of you who like to buy the pullbacks, the 50 or 10-day or 10-week moving average, it's not in a bad position here. So don't really see that as being unattractive. But right now, for my money, I think I like the Regeneron, and keep in mind that even though there are a lot of these companies out there like Onyx Pharmaceuticals and Affymax and Arena Pharmaceuticals and even Seattle Genetics, and the patterns might look good and they may act okay, and they kind of make you they're somewhat desirous to own at times. If you see them starting to move, like Affymax the other day when it was breaking out. And I think though, if you keep in mind that the big winners in the biotech space, outside I think of the early 2000s, right, Dr. K, we had some of them moving really fast on no earnings. Back then, but if you look at, say, Amgen, you look at Biogen, some of the big biotech winners, model stocks, as O'Neill would call them, they always had earnings when they started their moves or throughout their moves. So I think Your odds are better if you're going with a stock like Regeneron, and Dr. K, I think, listed very well the reasons, the fundamental reasons why we prefer this stock, and I think technically it's also showing some metal. Core is kind of a no-brainer. You know, you got the Bible gap up here. Now you have this breakout through the peak of the base. Let me just take this out a little bit. Breaking out to the peak of the base. Notice even if you were using the peak on the left side, it's holding it pretty well. You're not getting much selling. So my guess is this may go sideways for a few days, or it may just take off from here. But it is within, if you're using a standard new high breakout, it is within viable range here. I prefer to buy most of my position on the viable gap up, and you had a great opportunity to do so last Wednesday as it pulled back and tested the low of the viable gap up. And remember, a stock like Coors, especially coming up off the lows of the base, 2 to 3% additional added to the low of this gap up day is going to keep you from getting shaken out and allow you to come in and use this as weakness as an opportunity to take a position, and that's what we did. So it is working pretty well so far, and it doesn't really seem to want to give anything up because it is up today on a day when the market is down, or the indexes are down, rather. RAX is another one. I notice it seems like the stack is really kind of a strong theme here, and RAX had a big gap up on earnings and kind of held very tight, never really violated the low of that gap up day. And then you had this pocket pivot, which is almost kind of a breakout type situation. If you look at this as a cup, you know, you are breaking out through the peak here. And it did have this little retest, and you've had some strong action. Nobody's selling this stock. It looks to me like it wants to get to 60, where you might find some resistance before it pulls back, or at least tries to move sideways and build a little bit more of a base. I'm also keeping an eye on Facebook along with LinkedIn. I'm not sure if anybody likes the bottom fisher, but the one thing to think about, and just kind of mulling this one over, is that the whole world wants to short Facebook again, and you know, maybe they're justified. Maybe all the insiders are going to sell every last single share they have, and I know it's over 1 billion shares now that are available for sale. The only problem there is that it's a pretty high rate I've seen in some places. If you try to borrow Facebook stock, assuming that you can even. Last week they were quoting me 34% rate on Facebook shares, which means they're going to charge you 34% per annum to borrow the shares. So you're looking, if you're paying that rate, I'm not sure if everybody is necessarily. If you're paying that rate, you're looking for a quick pop because you're not going to sit with that very long on the short side if you're having to pay interest on those shares, paying a rate on them. So, you know, if you don't get a breakdown from here, I could see this thing popping back up at least towards, say, the low of the falling window, the gap down move here, which may be back up to 24, and get the short scrambling just because there's no natural sellers, and everybody who's going to sell who owns shares in the stock, as well as anybody who's going to short the stock, they've done it now, so we'll see what happens, but I'm kind of watching that as well. It looks a little bit interesting. Some other stocks. Tractor Supply has continued to act well. We saw this last week. I think I talked about it as it was drying up, I think a couple of weeks ago, pulling back in here, and it has come out, and now it's just trying to come up the right side. It looks a little bit like RAX if you look at those patterns. So it could just continue to come up the right side along with RAX, so we'll see how that progresses. Now, of course, the big story of the day, or the last few days, has been the move in precious metals, and we're seeing silver rocket through the 200-day moving average. So the SLV, this is almost like another bottom fishing pocket pivot, because now you're coming up through the 200-day moving average, and the position we've taken, we bought the AGQ, so every 10% the AGQ goes up, we're actually adding the same number of shares that we bought on this day here, and we just came in and bought it. I think it was $40.95. Bought it very quickly in the morning, and it's rocketing very sharply, and so we're at a point here. This is up more than 10% now, and is moving higher, but you'll notice that the SLV, on the basis of the SLV, that could be a second buy point right there on a pocket pivot. Dr. K, do you have any comments on this and how you would handle this given the wild upside action?
Yeah, well, you know, these things are still well in their basis, so this kind of upside move is going to clearly have some sort of retracement, and I I like the idea, like that the same pyramiding concept of, adding a certain number of shares every time the instrument goes up a certain percentage. But of course, if it goes straight up, if it continues to go straight up, then obviously we don't want to just keep adding because it is going to have a nice retracement. And I would suggest that, that anyone who owns this one, make sure that your average cost is substantial, a fair bit lower than where it's trading right now, so you don't become too top heavy, knowing that this thing is going to retrace at some point. And the last thing you want is that retracement to scare you out of your whole position. So manage your risk accordingly.
Now, and I would say just in more practical terms, if you're seeing the SLV come up through the 200-day moving average, you might assume that it needs to hold that level. And so if you did add some shares, if you already, hopefully, and you should, I don't think you should be entering the thing here. If you have some shares from 4 days ago on Monday when the Pocket Pivot report was sent out and you own some of this, you could add here with the idea that it should hold maybe at least the lows of the day or the 200-day moving average. Because you noticed yesterday that's what the GLD did. It had another bottom fishing Pocket Pivot. This one doesn't look as extended as SLV. We actually went with the AGQ because we thought that in this position, silver probably is better leveraged to a general move in precious metals, and that has turned out to be the case. So, sometimes I'd rather be lucky than good, but in that case, we made a proper assessment. Bless you over there, Dr. K.
Thanks.
So we made that assessment, but here now you got gold moving higher, and it's actually breaking out of this, trying to break out through this area here. And I was on Fox Business News yesterday morning telling Stuart that I thought gold and silver looked like they were going higher and that we did have a buy point on them. And lo and behold, they're looking pretty good so far. So that's really how you want to handle those. If you wanted to add, is this a Bible gap up on GLD? I don't know. Does that apply to precious metals, Dr. K? Does that mean this was a Bible gap up?
Yeah, generally not. I mean, if you look at GLD, it tends to jump around a lot, so you really can't, you can't take these gap ups as viable because it does it all the time.
Somebody is asking about, can you update the VIX situation, Dr. K? I don't know. I just kind of avoid that thing myself, but for those of you who are gluttons for punishment, what are your comments here, Dr. K?
Yeah, well, the whole it's been dormant because it hasn't sensed an edge yet, and that said, it's waiting for the right opportunity, and then you will all know through a report we send out in real time when the model does switch out of its cash position.
Yeah.
So that's the UVXY TVIX model, and as I've said, you have to keep your position sizes small simply because it is going to be volatile, and the fail-safe on the model is 19%. So if you have 10 to 20% of your position, your count in this UVXY, knowing that you have a 19% fail-safe, therefore if you have a 10% position, that's going to cost your account 1.9%, and 20% is going to be 3.8%. So you have to figure out where in there is an acceptable loss to your account. And of course, the idea is that this volatile instrument has tremendous upside. So the idea is that it certainly has the potential to capture quite substantial gains in a fairly short amount of time. Time value is quite enormous on it. So at any rate, it's waiting and ready to go.
Okay. In the meantime, I think the best way to play the most recent market signal is using precious metals ETFs rather than trying to play the VIX. That's the way I look at it. I think you also do okay with stuff like the TQQQ or the what are the other ones? Or the TNA's actually doing okay. That one might be viable on this pullback. TECL. Yeah, that's another one. You can see these pullbacks look pretty coherent. So if you have an existing position, I think you might be thinking about adding a little bit to your positions in these. I know we did that with the TQQQ that we have, and it's one position we're running. The biggest positions right now we're running would be the REGN, the Mellanox, and the cores, I think. But the TQQQ is a pretty good sized position, and with 3x leverage, it does give you a lot of exposure. Let me get out of here, but let me get back to this. And you can see this actually holding up a little better, but all of those seem to be doing just fine. So, and you might use this pullback as a place to add your positions in those. Somebody asks, well, in Mellanox, somebody mentions that in the book that we wrote, or the chapter we wrote, rather, in the book, The Wiley Trading Guide, which is published out of Wiley, Australia. Was that last year, Dr. K? The time goes by so fast.
Yeah. I think that was that should have been 2011. That's right.
Okay. There's a question on stocks that buck the market are the stocks that you should be keeping on. And yes, Mellanox is one of those stocks, and that's what we were talking about earlier when we mentioned it. And that's why I'm interested. I did the PE analysis looking at the earnings growth and the big earnings they're expecting in 2012. And yeah, I think that is a compelling reason to at least be adding to a position here. We're aggressive, so we'll actually take an initial position here and then work it from here if it works. But it's not one of our biggest positions. It is decent size, though. I mean, if you consider a 30 or 40% position to be decent size. I mean, to me, that's kind of a starter, but some people might think that's a big position. Let's see. A couple other stocks. I'm just going to answer some questions. We'll diverge a little bit here. Hain Celestial Group. Well, that's obviously a viable gap up using 65 level roughly plus maybe 2 or 3% as a downside stop. Nothing else really to say there. Somebody asked this question. I like this. Dr. K, do you know who Doug Cass is? Who's Doug Cass?
That does not ring a bell.
Thoughts on Doug Cass comments regarding market top? Well, I don't know. I don't know who Doug Cass is, and I don't really pay attention to what other people think about the market, and I don't think you should either. So, the way we look at the market, we're not giving you an opinion on what we think the market is going to do. We show objective evidence for why we're either long or out of the market or short the market, and I think that's how we operate. An opinion that you're going to have a market top, I've seen so many opinions of market tops just when the market starts a big bull market. I remember 98 coming out in November, and somebody was talking about how the Dow lagging was a negative indicator, and the transportation index lagging is a negative indicator, and the market took off. I remember strategists going bearish on the market in March of 1999, and they were right for a little while, and they kept staying bearish, and there's one guy in particular that I'm thinking of, and he still claims that he was right because the market topped in 2000, a year later, and he was right. Unfortunately, he missed like one of the biggest moves in the market between that time. So to me, kind of a fool, but and I'm not going to get into calling people names.
I just read
I love
his article,
but
I just read 2 of Doug Cass's articles.
Just right now?
Yeah, just now, and basically.
See what it does for you.
He's calling on a low VIX because the VIX has been so low, and also citing the potential for a triple top in the S&P. And looking this over, it just seems I have no agreement with either of these articles. That's why he's calling for a potential top in the market. I mean, there's just you can go back over the last 50 years, and you can find lots of cases where you had this kind of scenario that did not lead to a top. So I think his articles are I don't regard them as anything. It's just a lot more of this type of information overload that exists out there, and I don't think it's going to be very helpful.
I prefer to just watch my stocks, at least today. So, but when you get into that, this could happen, that could happen. I remember growing up, my dad would always say, yeah, and if my aunt grew testicles, she'd become my uncle. And I actually heard Joe Kernan on CNBC the other morning babble something about that while I was channel surfing through the news channels to see what's going on. And that is actually interesting. I discovered it's an old Yiddish saying, an old Jewish saying. I don't know how to say it in Hebrew. Maybe some of you do. But my dad used to say that all the time. Now, of course, we're Mexican-American. But growing up in East LA, there was a huge Jewish contingent in East LA. My dad grew up with a lot of Jews, and I'd say over half his friends were Jewish. And I remember one of my first friends when I was a little kid and living in East Los Angeles, City Terrace to be specific, was Jewish, and he was my best friend. So I guess that's where my dad picked that one up from. But, that's kind of how we look at it. So 4-stage breakout in REGN doesn't worry you. We don't worry about trying to count base stages, and we've stated that many, many, many times. So hopefully you haven't heard us say that before, but you can count bases all you want. It doesn't tell you anything. If the base is constructive, if the price-volume action is correct, it could have 5, 6, 7 bases. So the other thing is we don't look for things to